there's so much going on. I think, to start with, I think Europe is seen as a loser of a Trump presidency. A lot of that was priced in, right? Definitely in the last 6 months, you've seen European equities underperforming on the expectation that Trump would win and would put some tariff policy that would be negative for Europe. And that's what we got yesterday, right? So the risk is priced in, but it's still very real now that Trump has been elected. So I think this is one of the explanations. On top of European growth underperforming the US economy, and obviously US market being driven by very, very strong tech sector, which is even better after Trump won the election yesterday.
I get the tech side of it, but the fact that we haven't got techs didn't mean to say that our banks had to go down, for instance. So here's the interesting thing. I think this provides stunning opportunities because, and I love reading your copy, by the way. Thankfully, I get it on a weekly basis. We've just spoken to 3 companies today in Europe, 2 in the EU, 1 not. Munich Re, Zurich, and Heidelberg as well. A lot of these companies are falling down in terms of valuation, but they've all got massive exposure stateside anyway. They've got bases in Delaware and places like that. So even European companies that have large US exposure are getting discounted compared to their pure US-listed compatriots or peers as well. That surely provides an amazing opportunity.
Yeah, look, I think there are some opportunities in Europe. Valuation has been the investment case for Europe for a long, long time, and it did not really work, right? So I think what we want to see is companies which have unique opportunities to grow in this very uncertain environment and have, maybe some kind of exposure to the US, which is not threatened by tariffs. So we like some of the services businesses exposed to the US. We like dollar earners. We like luxury goods, which might benefit from a stronger US consumer without getting hit by tariff. I also believe that China could come back as a more supportive, story in the short term for Europe. There's a lot of negative about China. Tariffs are part of the mix, but what we are seeing now is some kind of bottoming out in Chinese economy. And I think the threat of more Trump tariff might push China to do a bit more policy support in the short term, which might benefit Europe as well.
How much of what you're communicating to us is about pricing already on some of the stock trades? I mean, you mentioned you like luxury, so I just went and charted the bellwether LVMH, and we saw a huge bounce on hopes that there would be some sort of recovery trade on China. All that has quickly given way, and we really are trading around some of the lowest levels again for 2024. So is it just a reality that investors are so negative on the trade that any positive news flow would move the stock higher?
I would think so. I think maybe the asymmetry is getting more and more positive. I mean, a lot of negatives are priced in. Look, we're going to have to deal with Trump policies for the next 4 years, and as it stands, we don't really know what is going to be implemented, what is part of negotiation tactics maybe, etc. So I think macro fundamental at some point will become the key driver of markets. And look, some of these stocks are looking very, very cheap again, while some of the drivers might get more supportive. Trump might benefit the US consumer. You might see more stimulus in China, so that might be a positive for luxury goods. And look, in the case of the banks, I don't see banks being impacted by some of these Trump policies. Banks should benefit from higher bond yields, maybe from deregulation in the US, and they are still trading very, very cheap in Europe compared to the US.